Well, let's get talking now. The monetary policy rate has been left steady alongside other parameters. The Monetary Policy Committee of the Central Bank of Nigeria took this decision due to the need to sustain the country's ongoing monetary policy trajectory. Lara Folayo reports.
It's the first Monetary Policy Committee meeting for this year. The monetary policy stance has just been left steady for reasons including a need to sustain the country's ongoing monetary policy trajectory, which requires a consistent policy choice given the outlook. Loosening or tightening considering prevailing economic conditions could trigger inflation, impact forex negatively, while truncating economic performance and reversing the downward trend in non-performing loans, amongst several reasons.
In summary, MPC voted to retain 1. MPR at 11.5%, 2. Retain the asymmetric corridor at plus 100 and minus 700 basis points around the MPR, 3. Retain the CRR at 27.5%, and 4. Retain liquidity ratio at 30%.
The committee wants a robust engagement with relevant stakeholders on subsidy to ensure its minimal impact on the common man ahead of its eventual removal. It is concerned about dwindling revenue from oil and wants the country to work on reducing its overdependence on imports.
Change demand pressure as the excess liquidity will be channeled to either frivolous importations or speculative holding on foreign exchange as alternative investment channels narrow, leading to foreign exchange depreciation and or inflation. MPC also dropped a tightening option at this meeting in view of the fragile state of the current gross domestic product growth rate and potential external and domestic headwinds confronting the economy.
The CBN says the public is gradually embracing the e-Naira after its launch 3 months ago. Efforts are also ongoing to use e-Naira on e-commerce platforms. It says the recently unveiled mega pyramids are just a tiny fraction of the paddy in its possession and wants millers to be considerate and make the rice available at reasonable prices. The Apex Bank says loan shark operators will be dealt with appropriately when caught. It advises the public not to patronize them but rather take advantage of its facilities in commercial banks.
On the 100 for 100 project, which targets private sector companies with projects to fund, the Apex Bank says so far 294 applications have been received with 60 validated, and the first set of beneficiaries will be unveiled by the end of the month. Lara Folayo, TVC News, Abuja.
Well, joining me now live via Skype to analyze deliberations and, of course, resolutions made at this first Monetary Policy Committee meeting of 2022 is no other person than the Chief Executive Officer of Cowrie Assets Management Limited, Mr. Johnson Chukwu. Good afternoon, Mr. Chukwu. Thank you for your time.
Thank you, Tolu. Good afternoon, and thank you for having me.
Yes, considering the global economic developments and, of course, domestic economic developments and all of the issues and pointers about the central bank governor identified yesterday, what were you expecting, and do you think that this move of retention would aid growth? Talking about this growth trajectory that we are seeing, is it going to aid this growth? Where are we moving to if we continue with this at this pace?
Okay, thank you. I had actually predicted that the Monetary Policy Committee was going to hold all the rate parameters in the current at their first meeting in 2022. And this was predicated on the fact that I know that we've seen a reversal in inflation rate from a southward movement to now a 15.63% in December. But most importantly, what the Monetary Policy Committee will be looking at, what is the outlook of the global economy and how would that impact on the Nigerian economy? The U.S. is threatening to, the U.S. Federal Reserve Chairman, Jeremy Powell, is threatening to step on the brakes to start rate normalization, and actually stating that they're going to increase this about 3-4 times this year. What that will happen is that when they do that, you're going to see a strengthening of the dollar, outflow of foreign capital from emerging economies to the more advanced economies, and that will put a lot more pressure on our foreign reserve and our exchange rates. So the central bank governor will not take any measure that will further worsen that. Similarly, like I said, the inflation has actually reversed. So any decision to increase the accommodative policies or losing rates will mean that pressures on inflation rate will further worsen, and pressures on exchange rate will also worsen. Any attempt also on the converse to increase rates will mean that the very fragile economic recovery witnessed last year could actually be halted. So I knew that the most appropriate thing was for them to stay on existing rates and watch as the world economy evolve, and then that will guide subsequent decisions of whether to increase or to reduce rates across on the major rate parameters.
I'm also concerned about interventions. A total of 927.94 billion naira has been disbursed to about 4.5 million smallholder farmers cultivating about 21 commodities across the country. Now, the impact on pricing and food inflation, when are we supposed to start to feel this, the impact of all of this? Are we still in a transition period?
I wouldn't say we're on the transition period. We are now dealing with some other structural bottlenecks that are beyond the monetary authorities, that are the purview of the fiscal authorities. Take, for instance, the inflation rate, the intervention the central bank has done to support agriculture. We are still seeing, in spite of those interventions, we are still seeing agricultural growth rate declining. The last report in the third quarter of this year, agricultural sector grew only by 1.22%. We've seen consistent quarter-on-quarter decline in agricultural sector growth rate, and principally because of heightened insecurity across the major farming base of the country. So that is beyond what the Monetary Policy Committee can do or what can be solved with monetary tools. We need to address that insecurity in the country. Until we do that, we are still going to continue to deal with elevated food price inflation, and which has a direct impact on all item food commodity prices, or what they call inflation rate. So it has gone beyond the interventions. The interventions maybe have helped to moderate the severe impact we would have seen if the intervention did not take place. But we have an elephant in the house, which is the insecurity. If you speak to people from the northwest, they will tell you that some of these bandits have now formed government that are imposing taxes on communities. Before you get to your farm, you have to pay them, and even at that, you still risk being kidnapped or being abused by these bandits. And that has kept a lot of people away from farming activities. So that's where the problem is coming. We are having supply shortfall from agricultural sector, irrespective of the intervention that the monetary authorities have actually engaged in.
Very interesting one. Removal of subsidy, one way or the other, we need to touch on it because it's key. Even the committee had to come together to advise government to strategize in the implementation of this very important policy. Now there's an extension, obviously, but what were you thinking? If that had happened, what would have happened to inflation and some of these figures that, of course, help to shape economic growth?
Let me start by saying that removing the subsidy is a necessary evil. We're only deferring the evil days. It's something we just have to deal with one day or another, one way or another. But having said that, if the subsidy had been removed, we would have dealt with a higher rate of inflation, possibly approaching close to 20% or 18% in inflation. But we've dealt with inflation rate of 18.17% in March last year, and heavens did not fall. But the key thing you have to recognize, taking out the subsidy is both an economic decision and a political decision. In a pre-election year, irrespective of what the ministers are saying, we know that political decisions will triumph over economic decisions. And I had said repeatedly at different fora that I would be too shocked if any government would take out subsidy in a pre-election year, irrespective of how much it wants to grow the economy. But we must have to accept the fact that, look, the subsidy is not helping us. It might not be most auspicious to take it out a few months to an general election, but Nigerians must brace up that one day, somehow, we need to take that out so that we can start growing this economy the way it should be. We can start restructuring this economy the way it should be.
Mr. Johnson, I know we've talked a lot about this even before now. forex issues, and we know how that helps to shape our economy, because obviously we still depend so much on imports. The CBN governor says there's a little bit of stability at the moment. Yes, you know, the disparity is still there on the parallel market and of course the I&E window. But what more do you think can be done to attract diaspora remittances into the country at this time?
Well, what we need to do to attract diaspora remittances is to make sure we have a very smooth, I mean, we're talking about this period in time, to have a very smooth and very cordial party primaries and general election. As it stands today, my projection of diaspora remittances are going to decline this year, principally because Nigerians in diaspora will be watching to see how high the tension or how low the political tension is in the current year, to know if it's the most appropriate thing for them to do to start their investments or sending money home. I always say this, the kind of diaspora remittances that have impact on the economy is not just the $500 or $1,000 people send to their families. It is the money they send home to develop infrastructure, to build houses, to build housing estates, to invest in the local economy that have that desired impact. The small amounts they send, in as much as when you sum them up, it could become something literally material, but that's not what has a major impact. So, and my take is that most Nigerians in diaspora are not going to start building houses now, building housing estates now, or trying to build infrastructure or invest in major businesses in a pre-election year when they think political tension is going to be high. But if we have smooth party primaries and there's no tension, and the parties nominate very credible, very competent candidates, and then maybe towards the end of the year, investment will resume as people want to take positions ahead of transformation in the economic policy environment.
Mr. Johnson, concerns about inflation. I know you touched on that in your first submission, but we agree that, or many are saying that what happened in December is just in reaction to seasonal drive in price development. Do you think that we'll continue to see a decline in inflation moving on in 2022? Would there be a reversal, even as we expect maybe that for January?
I doubt. And there are a couple of downside risks that will affect inflation in the current year. One, granted that the government has said they're not going to take out the subsidy, I also believe that the burden of paying the differential between 162 naira per liter and the landing cost of, I hear the report that said 403 naira will be quite burdensome on the government. So I expect in the current year, you're going to see some agreement with labor to increase petroleum prices. So that will have direct impact on inflation. I had mentioned the issue of heightening insecurity in the major farming belts of the country, and that will worsen this year because those bandits and criminals will want to extract as much value as they can from political leaders, particularly in Niger Delta. We've seen crude oil production decline to one of its lowest level. Last year, crude production was about 1.31 million barrels per day. I think in November, crude production was just about 1.396 million barrels, when our OPEC quota was about 1.7 million barrels. We're having a shortfall of close to 300,000 barrels daily, which will mean that our foreign exchange earning coming from export of crude will decline. I had mentioned the issue of diaspora remittances. You should also expect a decline in foreign portfolio investment. This will all exert pressures on the exchange rate, and you should expect depreciation of the local currency. If that happens, that will have a direct transmission effect on inflation, because imported food items, imported inflation will have will affect the overall consumer goods, consumer prices in the country. So I expect we should see upward trend in inflation rate in the current year.
All right, finally, Mr. Johnson, before I let you go, let's look ahead and looking at all of these challenges that we've talked about. The CBN is intervening in the pharmaceutical space, agricultural space, creative space. We can go on and on. The 100 for 100 policy for production and productivity is also on one side. How do you see them sustaining all of this? What's the fiscal side? What are they supposed to do to support the actualization of all of this so that we can achieve inclusive growth?
Well, what I would say is that the intervention of central bank, even area that should ordinarily be the top of the fiscal authorities, because we have seen a fiscal doldrum. We've seen a situation where the fiscal authorities have been absent in areas where they should have been very active. And like they say, nature abhors vacuum, and the central bank decided to fill those vacuum. As it stands today, I believe the central bank is overstretched. But without what they are doing, maybe we wouldn't be talking about an economic recovery we're witnessing currently, or coming out of recession. So, but of course, we know every positive economic action has a negative side effect. We've seen the impact of that is on inflation, and I think the central bank had actually said sometime last year that they will start recalling some of these intervention funds. If you also remember that the central bank intervention funds are currently at 5% interest rate, down 400 basis points from the previous 9%. I think we're going to see those things begin to reverse in the current year, subsequent year. Maybe not aggressively this year because of election pressures or political pressures, but subsequently, I think the central bank will begin to go back to its core business of price stability once the fiscal authorities roll up their sleeves and get to work on areas that they should focus on.
All right, I must thank you so very much. I've been speaking to the Chief Executive Officer, Cowrie Assets Management Limited, Mr. Johnson Chukwu. Do enjoy the rest of your day.